Alright, this is a review of the Dow hourly chart. So I'm gonna go over the hourly chart and show what what type of action occurred and behaviors of the chart. So this is Dow hourly chart, and today's action, today's move down. It wasn't something that was unexpected for those who were watching the chart. The indications were given in advance, and I'm trying to explain how it occurred. First of all, probably until 6:12, or like between 6:12 and 6:13 today. Um, Here's where the market started being bearish. Okay, now just before that it was bullish. This is the wave chart. You see more volume up, less volume down, more volume up, less volume down, more volume up. Now you finally have more volume down here, but it's basically they buy it cheap. All right, so it's not being rejected. Buyers step in, more volume up, less volume down, more volume up, less volume down, more volume up, less volume down. Those who understand how to read volume, I created these labels because one of the things that the tape reading chart, also known as this wave chart, is intended to do is build tape reading intuition. Okay, successful tape reading is judging which side has more pulling power. Alright, successful tape reading is which side has more pulling power, and also knowing that buying and selling waves will only go so long as they can quote unquote attract a following. Alright, now how you judge that pulling power is obviously through price and volume, and time as well. Time is just, time and volume are very similar, but not exactly the same. So it's really price, volume that judge whether uh, the market is continuing to quote unquote attract a following. Alright, now you see more volume up, less volume down, more volume up, less volume down, more volume up here. But notice that this is more volume, and it's more volume than the prior wave, but it doesn't make a high because it's effort. Meaning it's actually selling here, so you can't just say, alright, more volume, bullish. Is it making a higher high, or is it having trouble making a high? That means that effort, there's a lot of effort, and that's what initiates this selling wave. Similarly, you have more volume up, low volume pullback, followed by more volume up, low volume. And this one is really good because the volume is significantly less. Look at 1084 and 70, so this is extremely high probability trade. So it goes up, up, and then up, and now you see the turning point. Okay, now you see the turning point. Sure, you had around 683, which is not really 683. I think it's like 683,000 or something, or 68,000. See what did I do? Yeah, so add 100. So it's 68,300. So here is 68,300. Now 28,500, and then it goes up on 6,800. This thing totally evaporated. The volume here evaporated. Okay, that is very meaningful. You can't just have volume evaporate like that. Alright, it is bearish. Volume goes, it means like the buyers are no longer there, but the real test is like when it pulls back down on more volume. Alright, and then it pulls back on less volume, and then again it makes a lower low on a much higher volume, which you'll notice which you'll notice it's like these guys took a short position. Okay, watch. This here is 683, right? Now when it reverses, you have 686. Now, when the numbers are close like that, in my mind, it's almost as if someone got out, they exited on the up wave and took short positions on the down wave. Now, that's not always true. It could be a coincidence, but a lot of times the numbers are way too close to, you know, to, so anyway, so, 686 down, 265 up, okay? So that right there, you can clearly see a turn from the bullish, the white waves here, to the red waves. You can clearly see how price is changing from bullish to bearish, and how the volume of the selling is going up and the volume for buying is diminished. Look at this, 686 to 68. That's a major change. How do you go from like 10 times more volume to 1/10 of the volume on the up waves? So obviously there's something going on. So that's what happened. And this right here is where's the arrow? That's your sign of weakness. Why is it a sign of weakness? Look at how big this print is relative to the rest of the waves. Look at that. So let's say from here, that is the biggest selling wave. The biggest selling wave in 1, 2, 3, 4, 5, 6, 7. In 7 waves, at least 7 waves. And you have weak buying. So then what happens? They pull back on light volume and then more volume on the rally. This is a phenomenon you typically see before a breakdown. I don't know why it's so prevalent, but it's like the last rally before a breakdown. It's kind of like you see this a lot. What you'll see is it'll do this and this, then this, then this, then this, and then what will happen is there's going to be one wave up that takes out the stops here. Okay, that takes out these stops here. Alright, so this is just a variation of that, meaning from that bear flag look and feel, you could see it's bearish, but there'll be one rally here, the purpose of which in my opinion is to do some type of upthrust, or it's like some type of effortful rally, or it hits a minor support level and bounces. But I see this all the time to the point where I'm a little bit desensitized because I'm almost expecting it. And today was no different. This actually occurred today as well. And like over here, the high is 78, 25378, 78, okay? How do you explain that over here the high is 25380? It's only 2 ticks and then it closed off the highs. You see that? So in my opinion, moves like this are up thrusts before the big move down. And it happened today on the lower time frame charts too, on the 5-minute. Very obvious, so even right now it occurred after hours. So don't So this really points to 2 things. First of all, know where to put your stop. You gotta know where to put your stop. Okay, meaning anticipate anticipate an upthrust before markdown. Anticipate an upthrust to against the prior pivots. Just anticipate it. Like over here, you have this rally down, right? Then you have this tag once, tag twice, then go down. Anticipate an upthrust is going to occur. It is going to occur. Alright, because they don't want you in for the ride. Alright, so anticipate the upthrust. It's rally on more volume, low volume test, another low volume test. Relatively speaking, after the sign of weakness, anticipate that this area is going to be tagged, because you know for a fact that the stops are going to be on the prior pivot or the other pivot that's really close. Okay, it usually looks like this. I just drew it like it's sometimes it's like this. It's just a modified version of this wannabe bear flag. But anticipate that they're gonna that it's gonna go right above this area. Alright, you have to just anticipate that, because that's exactly where it's gonna go. Alright, so the stop has to be above the rally, not the consolidation. The stop has to be up here above the down rally, like above the rally down. The stop has to be above the down rally. It cannot be anywhere in the consolidation, because the consolidation is game for an upthrust. Okay, very important. When this whole area right here, something I learned through a lot of stop outs, this whole area, this, the pivot right here, this whole thing is game for an upthrust, meaning they can play the range here, but it is very hard for them to get above this area, the rally high. Because this is the rally, it's not the consolidation. Consolidation, they get right above here, no problem. They do it all the time. Happened today on the 5-minute chart before the move down. You go check the chart, and I'm showing it to you on the hourly chart, and it is just a very obvious maneuver. What you want to do is wait. If you do see that, short it. As soon as it reverses, short it. Or just, if you're going to get in here, like on this break right here, the stop has to be above the rally high. And the problem is, I know this, sometimes there's a lot of risk and all of that, but I think that's all psychological, because it's actually less risk. Because, in my opinion, it's very hard to stop. You have 3 pivots, the rally high as well, very hard to get above there. If they're selling, it's not easy to get above that area. Very, very difficult. And that's why they, it didn't go above the high. Anyway, so you can see the transition from bullish to bearish. You can also see the transitions of the volumes from heavy buying here to heavy selling, from low volume pullbacks, you see low volume, low volume, low volume, to low volume rallies, low volume, low volume, low volume. There's a complete transition here. The turning point has occurred. It has happened, and then finally you see what I just like to call it the screw job, because that's what it's designed to do. And I think I'll show it on the lower time frame as well. Just give me a second. Yeah, this is the lower time frame. This is where the market went. It's very bearish. So Remember, this is a pivot, right? And it broke, so they're gonna sell, you know, here, somewhere here, or here, or wherever. So if you look at this rally right here, look at the exact area that it goes above. It is targeting this area. This move, the high here is 43. The high here is 46. That's just enough to make sure that all the stops here are run. And once it tags that area, look at it goes straight down. See that? So this is why, especially on the short side. On the long side, I think this is less prevalent. But on the short side, there tend to be these spikes. I mean, it happens on the long side too, depending on the market and condition. But on the long side, it's like, I don't want to say guaranteed, but you know, being on the short side, it's very common. Anyway, so this screw job right here, which is an up thrust of this area, is also known as up thrust after distribution. This is something I think a lot of people don't really look at that much or don't know about, but there is a type of upthrust that only occurs after distribution and before markdown. This is that maneuver right there. Okay, and I know how they set it up. It's as soon as the market, it's bearish, there'll be a low volume pullback, which leads to a higher volume rally, which is just enough to hit the stops and then the break. So now I expect this move down to be significant. And again, this is just the educational only. It's just it's like talking out loud, but that's what I think is setting up. And that's all, folks.